A stock like RH. So RH, man, what a turnaround for the stock price recently. Now, RH, very high-end furniture company, obviously, right? Trading at a forward P on the stock of, 26 based upon January 2025 numbers. So, they're obviously in this fiscal year right now, and this ends in January. So really, I like to look at the next year, right? 26 kind of forward P there, and 7% revenue growth expected. RH is in a tougher place short term because obviously the housing market's in a weaker place, even on the super high end. And so that's kind of put RH into a little bit of a short-term kind of pickle where it's just not exciting times for RH. But nonetheless, Gary Friedman has done a great job growing this business over the last 10, 15 years. I've been, super impressed with him, the brand he's built, and I think they're going to continue to kind of, build this out over time. So overall, when I look at the public count, I continue to be happy about where it is. I don't like how heavy these positions are. I'm doing everything in my power to kind of build up everything else. But at the end of the day, I'm not, it's just, I could sell Meta and I could sell Tesla and put that money in other positions to make the size smaller. But it's just like, do I want to sell Meta or Tesla? Heck no. No, okay? So I'll ride with those. In terms of where I'm putting fresh new money, I'm putting in stocks other than Meta and Tesla, right? But in terms of selling out of those, just because they've gone up a lot, right? We're up almost $400,000 in Tesla, and we're up over $300,000 in Meta. I can't do that, man. Can't do that. That's just, it literally doesn't make sense. With Tesla's long-term future and with Meta's valuation where it is in their long-term future, it'd just be insanity to sell those stocks just because they're big weights. I'm just going to focus on building up everything else. And then hopefully some of these stocks start coming together so then they become better weights, right? Like think about it like if Honest starts to come around and Oatly starts to come around, like an Avant starts to come around. I mean, yeah, imagine if PayPal starts to run big over this next 12 to 24 months. Those ones will become bigger and bigger weights, obviously. But the risk is that if Meta keeps going up more and Tesla keeps going up more, those could also become bigger weights. So this is where it gets into kind of some puts and takes there and some little bit of wildness, folks. So next up here, Verizon. Oh my gosh, it's another one of these stocks, AT&T and Verizon. These are two stocks that everybody's looking at right now. This seems like easy money, doesn't it? Like, wait a minute here. Wow. First off, the stock is down about 35% in the past 5 years, 35%, right? AT&T's, if I recall, is even worse. And so Verizon's reporting Tuesday before the bell. It looks like, oh my gosh, dividend yield 7+%. Oh my gosh, it's Verizon. Like, come on. Here's the bad thing with Verizon, okay? Two insanely bad things. And this is why I'm not touching Verizon or AT&T, although the stocks look super cheap right now. One, these companies have insane debt loads. I can tell you, with interest rates being where they're at, this is not a great time to be a company that has insane debt loads. And that's exactly what these companies have, okay? And so now imagine a scenario where, let's say, inflation is stickier than people assume. Let's say the economy holds up better for the next few years. Let's say, for instance, say that's a scenario that plays out. Might not be, but let's just say it is hypothetically. Okay, then Verizon and AT&T, these type of stocks are going to be in a really bad position. They cannot have interest rates be up here because they've taken us such insane amounts of debt over time. And, if they have to refinance any debt, it's going to be at ridiculously high rates. These companies were fine for a long time when interest rates were on the floor. When Fed funds rate was like 0%, all cool. Take out as much debt as you want. But now, with Fed funds rate 5% plus, all of a sudden companies like this are realizing, second reason, they have a lead problem supposedly in a bunch of the wiring. That's one of those things that who knows where that's going, but it's probably not going well, okay? Is that going to be $1 billion as charges that the companies are going to get hit with? Hundreds of millions of dollars or tens of billions of dollars? No one knows right now. All we know is it's going to be a problem. They're going to have to deal with it, and they could end up in a lot of problems with states, cities, and potentially the U.S. government in general. That's not going to be good, okay? So nonetheless, folks, Verizon, AT&T are those type of stocks that, man, they look very tempting. But once again, just because it looks tempting doesn't mean you touch it, okay? Corsair, the good news is they're in a pretty decent capital position. So it's just like, in order to get out of that gulag of $5, under $5 stocks, like they got to pull the numbers together. A stock like Corsair's looking pretty good. We're trading at about a 21, PE based upon 2024 numbers. We're trading, we're supposed to have about 12% revenue growth next year for this company overall. The gaming space should heat up next year. We should have some big games coming to market. That should be very good for the gaming sector in general. And, so Corsair is just kind of like, it's just like a solid stock to own, in my opinion. Not too crazy. It's not going to, knock your socks off in terms of like a 10x opportunity, in my personal opinion. But I think it's just a good company that should get good gains. I wouldn't be surprised at all if Corsair outdoes the S&P 500 over the next 5 years. That's kind of the way I would look at a stock like a Corsair Gaming, okay? Now, Oatly is kind of in the same boat as like an Honest, just been going through a really tough time in their business model and trying to put it together, right? The good news for them is obviously transportation costs have come down immensely and the price of oats have come down immensely, and they've also made some transformations in their business model to hopefully get to a much better margin place and focus their capital much more on marketing rather than having to focus on like building factories and those sorts of things. Google's interesting because I always look at the main channel here on YouTube. I've had this main channel since 2016. Dating myself here on YouTube, okay? It's a long time. And I've always kind of seen whenever my ad rates are really strong on this channel, actually, usually Google earnings are looking very, very good. Now, whenever my ad rates are in a weakened place, guess what? Usually Google earnings are in a weaker place, which is very intriguing. So it's almost like I have a little bit of insight into kind of what's going on with little Google McDougal here, okay? Now, the interesting thing is if I just look at kind of this year, we've seen a lot of stability. It seemed like the ad market was the worst at the beginning of the year. Like January, February, things were just in a really bad spot when an ad market, came to the ad market. Then things started to come back a little bit. Then we had some more weakness kind of around April, it seemed like. And then since then, it seems like we've been on a little bit of an uptrend throughout May, June, and into July here at this point in time. So I don't think Google's going to report any sort of shockingly great numbers, but it does look to me like things are going to get better for Google moving forward, in my personal opinion, based upon kind of what I look at, okay? So we'll see how it all shakes out. If I had to guess upside or downside for Google stock, I would guess upside, because I think we're probably through the worst of the ad market for right now, outside of a major recession coming in 24, 25, or something crazy like that. For now, it looks like we're in a much better position, kind of moving forward. I do not think it's like booming days for Google, but I think things are going to get a little bit better here, okay? Honest is a turnaround candidate. We'll see what happens there. I hope Carla can pull it off. I really do. It's been a sad story. They just haven't been able to put it together in terms of the margins, revenue, and EPS. So we'll see. We'll see, man. It's a hope situation, unfortunately.